Hey guys, I hope you're having an awesome day. My name is Hamish Hodder, and in this video, we're going to be going through my investment portfolio September 2018 update. And you guys ask for these videos every single month, so that's exactly what I'm going to be doing. I'm going to be making these and bringing them out every single month. And since not a lot of changes have happened since August, since last month's video, I'm also going to be using these videos to just talk about some of the notable news stories that are coming out about the positions that I have in my portfolio. But anyway, as per usual in this video, we're going to start off with my portfolio composition. How much cash do I have compared to how much equity do I have? Then we're going to jump into some of the recent trades or trade for this video because I've only made one significant trade in the market since August. And then lastly, we're going to go through my holdings, see how much each makes up in my portfolio as a percentage. And then, as I just mentioned, we'll go through some notable news stories about each of the stocks in my portfolio. So we'll just get straight into it and start by talking about my portfolio composition. So how much do I have sitting in cash ready for those bargains to come on sale in order to buy more stocks, and how much am I currently invested in the stock market? Now, as of last month, I had in cash, I had 54% and I had 46% in equities. So I had just a little bit more cash than equities, and that has since changed in my portfolio. I now have 40% in cash and 60% in equities. And really, there's two main reasons why this happened. There's one main reason and then one smaller reason that sort of helped as well. The first smaller reason is that Thor Industries, it came off its bottom and started to bounce up a little bit, a few percent. And of course, when it bottomed out, I was buying some more shares and was adding to that position, as I mentioned in my last video. So that has bounced up and it has increased the equity proportion of my portfolio. But that's just a minor reason. The main reason why I'm sitting in more equities than cash is because I actually moved some of the cash into a stock, and I'm about to talk about which one that is. But essentially, my cash portfolio started to build up to about 60% because of some of my other income sources, and I just didn't want it to be 60% in cash. I didn't want it to be that high, so I decided to move some of that cash into a stock. And let's just go straight into it and talk about what that trade was. So the trade that I made this month was that I moved some money into Vanguard Australian Shares Index. I moved some of the cash into the index fund that I hold. And I know that's a little bit boring, but that's the trade that I did. And essentially, as I just mentioned, my cash portfolio was getting really big, and I decided I wanted to deploy some of that cash into some equities. And there hasn't been really any individual stocks that I've found to be incredible bargains and amazing businesses besides Thor Industries, and Thor Industries is already such a huge position in my portfolio, so I had no interest in adding to that. So I just thought that I would put some into an ETF and sort of build up my foundation of that broad market diversification in my portfolio, because I think that is really important, that you have a considerable percentage of your portfolio just tracking the whole market, because there are going to be times when your individual stock picks are going to be poor, especially when you're starting out, and no one is immune to that. So I think it's really important that you have a considerable amount tracking the markets, so that even if all of your individual stocks perform really poorly, maybe they do negative, maybe they do 1 or 2% per year over a 5-year period or something like that, at least you will have that base of an 8 to 12% return from the broader market. Oh, and if you don't know what Vanguard Australian Shares Index is, basically it's just an ETF on the Australian Stock Exchange, and it tracks the top 300 companies on the ASX. So it's basically like it's the equivalent of the SPY in the United States, which tracks the top 500 companies on the stock exchange. So this is just an Australian one for the top 300 Australian stocks. So if you're interested, I think it's a really good ETF to be invested in. I know Brandon just spoke about it in his latest video as well. So you should go check that out if you haven't seen that. But yeah, it's a really good ETF just to have a broad diversified base for the bottom of your portfolio in order to build upon. Alright, so now let's go through each of my holdings and see what percentage each of them makes up in my portfolio. And as I go through them, if there's any notable news stories about each of them, I will speak about that as I'm going along. So at the moment, the smallest proportion in my portfolio is NAB, which is 4.9% of my portfolio. And not a lot has really happened about NAB, so I don't really have anything to say about it. There was all that Royal Commission stuff, but that's kind of behind the banks now. They are starting to raise their rates. They actually raise their rates out of cycle, which means that generally the banks only raise rates when the Federal Reserve or the Reserve Bank of Australia in Australia raises their official cash rate. And some of these banks decided that they're just going to raise them off cycle, and that was a little bit controversial. However, that is beneficial for the banks because it means that the interest rates on their mortgages, they're going to be bringing in more money. Next, we have YY, which is at 5.5% of my portfolio, and this one pretty similar. Nothing amazing has happened. This tension between the United States and China has continued to hurt Chinese stocks, and I've seen a lot of people on YouTube and just anywhere else as well talking about these Chinese stocks and how they're all getting slammed at the moment. I think that while this trade war continues to go on and on, it's not going to be good for Chinese stocks. However, I do see that there will be some sort of relationship built there eventually. There'll be some sort of agreement come to, and when that happens, I think that we'll see a lot of these Chinese stocks recover, because I know that at least for YY, there's a lot of stocks out there on the Chinese market that are growing at 30 to 50% per year, and they're trading at a 10, 12 PE, which is incredibly low, and it means that the market absolutely hates them at the moment. And it is a speculative position for me, so I'm not watching it too closely, but it will be interesting to see if Trump can come to a deal with China and sort of see if those stocks will recover or if they'll just continue to fall. So the next biggest stock in my portfolio is Facebook stock, and it's at 8.3% of my portfolio, which is a little bit higher than I would like to have it, because I think of Facebook as a speculative play because we don't have 10 years of data, and I haven't been able to get it at a valuation where I think that it has a considerable margin of safety, a big margin of safety. I think that you have to assume pretty high growth rates in order to get to a value buy in Facebook. But I think as a speculative play and as a growth play, it is a very, very interesting stock. Since I bought it a couple months ago, I think it was, maybe it was even last month, it has fallen from about 175 down to 160. So it's fallen a little bit, but I don't really watch the short-term movements. I don't really care. I think that if they can do 12 to 15% per year for the next 5 years, then it'll easily return around 15%, 15 to 20% to its shareholders, which is a huge return, and it's a return that I'm happy to make on it. But I will be keeping it as a small position until we have those 10 years of data and until I can decide that it's a company I can completely get behind. So the next stock that I have is the second biggest position for me in the stock market, and it is that VAS index. It's that index fund that tracks the top 300 stocks on the Australian Stock Exchange, and it currently has 14.5% in my portfolio, so it's getting to be a considerable position. I wouldn't mind having 20 or even 25% of my portfolio in that if I can't find individual stocks that I think are amazing stocks that I would invest 25% of my portfolio in, which I haven't been able to find many of them recently. So that's what I've been doing. Every time that I've had new money to invest, I've been keeping a considerable amount in cash, but then I've still been investing some into just the broader market, into that VAS index. The second last one we've got here, and my biggest position in the stock market, as you all know, Thor Industries, and it currently takes up almost 27% of my portfolio. So it's starting to get really, really high up there, and I definitely don't want it to go too much bigger. So I'm going to explain what I will be doing with Thor over the next few months. So basically what happened with Thor is I started to invest earlier in the year, and then it's fallen due to these Trump tariffs. And I guess there was a number of institutional investors who started to pull their money out because you could see that there was considerably high volume drops in the stock price, and it looked like some sort of institution or a number of institutions were dumping the stock, which is unfortunate. And Thor is actually held, I think, 80 or 90% by institutions, so by big mutual funds and that sort of thing. So that means that these mutual funds will be able to move the stock whenever they want to sell out or buy into the stock, and it's going to have a big effect on how it moves. But anyway, it dropped down, and it actually fell all the way down to $90 per share. And in my previous videos, I said that it would be a buy around that price. So I started to invest some more money into Thor Industries around that $92 mark, I believe I invested in it. It's now since then moved back up to about 97, so about a 4 or 5% move upward. And that is why Thor Industries is now 27% of my portfolio, because it's becoming an increasingly bigger position. And essentially, I'll just be watching this stock. The full year earnings for Thor come out on Friday, so that's really exciting to see what kind of numbers they prove and see if they beat the consensus. And really, if this stock continues to move up over the next few months, if it moves up 10 or 20% over the next few months or over the next year, I will be looking to sell off some of that, and I'll probably move some of the Thor money into just the broader market, because I don't want an individual stock to make up more than 25% of my portfolio. So when it hits 30%, I might take 5% out and move it into just the broader market, just to keep Thor as a smaller position. I'm really not sure what Thor will do. It depends on how their numbers are. If their numbers start to decline and it shows that the RV industry is starting to slow down, then I would expect that we'll continue to see Thor decline. And as my portfolio starts to grow, and as if that position in Thor shrinks to 20%, I will happily add more shares to bring it back up to 25%. I have no problem with adding more shares as this stock falls, because I know where it'll be in 10 years' time, and the further it falls, the more money that I make. So I'm very happy to see this stock continue to fall over the next couple years. And then lastly, of course, we have that 40% cash position, which is actually the lowest cash position I've had in quite a while. So I've been investing a little bit more this year, especially in Thor and just in the broader market. And I also made that Facebook investment last month. So I have been making some investments. I hope you enjoyed this one, guys, and I will be making this video again next month. And I hope you enjoyed this one, and let me know your thoughts down in the comments below, what you think about my holdings, what kind of holdings do you guys have, and that sort of thing. Make sure you hit the like button if you enjoyed, and make sure you become a subscriber if you want to see more of this content. My new episode of YouTube Stock Portfolio will be coming out on Saturday, so look forward to that. And of course, make sure you check out me and Brandon's podcast, the Young Investors Podcast, which is on the Aussie Wealth Creation YouTube channel. But that's all from me for today, guys. I hope you have an awesome day, and I'll see you in the next one.